All right, we're live. Welcome back, investors, to Ticker Time News. I am Adam, and this is the place where smart investors come to learn, including myself, from you. And I am sure glad that my prediction late in yesterday's live stream about today's market did not come true. And the markets rallied into this long weekend ahead of us. And I want to make this point, the market is closed on Monday. I didn't want to forget that. I almost did. The markets are closed on Monday for Memorial Day, so you don't have to worry about trading or investing or anything happening except for in the crypto market. And you can still trade in the crypto market. Now, the stock market finished a volatile week on a firmly higher note, with the S&P 500 up 2.5% and the Nasdaq up 3.3%, rising, I should say, for the third consecutive day, while the Dow, up 1.8%, logged its sixth consecutive day in a row, snapping its longest weekly losing streak since 1932. 1932. The Dow hasn't been this bad since 1932. I just can't get that out of my mind. That's just crazy what we're going through right now. Now, equities recorded the bulk of their gains in the morning. If we're looking at the S&P 500 here, I'm going to go to the 5-minute chart right in front of us. 5-minute chart. I'm going to squeeze it out to just today. You can see that the majority of the gains for the day, they're right about here over my head, where this one big green candle is over here. Most of the gains the first hour of the day, and we got them. They were locked in. And the market just creeped up slowly, and then the last 5 minutes, 10 minutes of the day, it really took off. I mean, it was 0.25% over 5 minutes. I mean, so not huge, but that candle is much bigger than all the rest of the candles except for during the first hour of the day. So a nice acceleration into the close on a long, extended 3-day weekend. That is a bit odd to me. So I find it very interesting. All right, let me go back to the daily chart here for the S&P 500. Now, I want to take away volume, make this a little clearer, zoom in here. I want to move this. Let's see here. Let's click on it, slide it over, because now we're back up here. This is incredible. Just sliding it on over a little bit. Okay, I want to measure one thing. Our snapback rally that we had the middle to end of March. I want to measure top to bottom. Oh, all right, 11.5%. Okay, so our snapback rally that we had it started in the middle of March and went to the end of March. That was 11.5% rally on the S&P 500. It took 15 days, okay? Let's remember this. 11.5% over 15 days. Where are we at right now? That's what I want to know. If we go from the bottom that was hit here on May the 20th, and we go to where we are right now, and I'll settle back down, we are at 9%, 9.1% over 7 days. So if this is anything like the snapback rally, then that would mean, and nothing is for sure going to play out the way it had in the past. I'm just using this as a potential example. So if we have 8 more days to go, but we don't really have a lot of percentage points to go, 2.5%, really? So 2.5% over the next week is not going to be a very good week if it's anything like that. Where would 2.5% put us from where we closed today? Let me click back on the ruler. 2.5% is what I'm looking for. Technically 2.4%, but let's get as close as I can. All right, that's pretty darn close. So another 2.5%. puts us in an interesting spot up here. There's resistance at 4,300, several reaction points, several rallies went up to 4,300, stalled, rejected, fell. Same thing here and here. So there's a lot of reactions, even going back at the beginning of the year. If we were to continue this rally on Tuesday, right, 2.5%, when we look at, we did 2.5% today in the S&P 500, huge day. If we do another 2.5% on Tuesday, then that doesn't look good for the rest of the week. And if we look at when the next FOMC meeting, that's not until the 14th and 15th of June. So that doesn't happen next week either. Okay. So maybe we do continue this rally and we get up to 4,300 and we slow down a bit, because something else that occurs at this area at 4,300 is the 50-day moving average, which is this light blue line that's going in this direction. That also comes into play right about 2.5% away from where we are right now. I find that interesting as well. So a lot of interesting things happening on the chart here. We broke through this big resistance yesterday. That was key. Once we did that, we got above 4,100. That is a crucial area on the chart as well, because that goes back to February 24th. That was the bottom. That's where we hit that low of the year, our second big low of the year on February 24th. That was at 4,100. So breaking above, closing above that at 4,158, that's an excellent day, and things are moving in a very rapid way in the market right now. If you're not acting quickly, you're almost losing out. The only exception I would say to that would be the crypto market. Crypto is not doing so good right now. You would think that with equities just taking off right now, crypto would be too, but it's not. Crypto right now, I think, is in a little bit of trouble. Now, trading crypto is okay, but the longer term investors, let me go to the weekly chart, and I want to show you something here. 1 week chart. Look at Bitcoin. 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row it has been falling. For actually, no, my apologies, 9 weeks. I don't think I caught this candle up top here. 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row it's been falling. Something's not quite right here in the crypto market. The areas of support just haven't, I mean, last week they kind of held, but this week they just completely fell through. So I just wanted to mention that. Equities are doing good. Treasuries were flat today, but there's something going on with the crypto market. But as I pull this back on the weekly view, the crypto market goes through these phases where it runs up really fast and then it falls down. And it happens every 4 years. There's a halving cycle. If you don't know what that is, we can go into detail in that at a later date. But just right now, crypto has a 4-year cycle, especially Bitcoin, and it's just something seems a bit off right now. I know big falls are expected right now. It's kind of like the crypto winter that we're in right now, maybe a crypto ice age, if you want to put it that way. Ethereum also seems off. Again, the weekly view here for Ethereum, and it's been falling 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row. It's been red. Now, it's not uncommon, right? I mean, just go back to, November, and we had several weeks in a row. There were some green candles sprinkled in, but that was a long fall as well, almost as far as the one we've taken right now. And I do want to point out I'm going to go to the 5-minute chart here for Ethereum. Last night, I did send out to Patreon members about a short trade I was just taking. I was having fun with Ethereum. It happened back here where I've got this wedge pattern here. I posted it right at the breakout, just about. I got in at 1745. It rallied, it held for a while, and then it gave it up, but I still held it. And then it rallied this morning. That's when I offloaded it along this pattern here when it was just moving sideways. I thought it didn't have any more gas. And also, I'm committed to holding the Ethereum and Bitcoin and Cardano that I do have. I'm right now not committed to growing that position any further than it is right now. However, I will trade around with a very small percentage of capital just to have fun and to stay engaged with the crypto market, Bitcoin and Ethereum, more importantly than any other coins out there. So just so you know that. And then you can see this just doesn't make sense. The equity market's rallying, tech rallying, but crypto not. So I think there's something off here. It could just be the crypto winter that typically occurs after a bull run, but this one does seem a bit on the extreme side. So I'll just leave it at that. Okay, back to equities and stocks. So equities recorded the bulk of their gains at the beginning, first hour of action today. And then they added to their big gains later in the trade, especially the S&P 500. There was a nice run at the end. Now, the Nasdaq maintained its lead throughout the day, while the S&P 500, and let me just pause for a moment. I want to go and pull up the Nasdaq here so you can see it. It ran. It was in this falling wedge. You can see that. And it had its breakout yesterday. And then today it continued. The resistance that the Nasdaq could face is when it gets up to this blue line up here, which is around 13,050 points. Okay. And that is about, if we measure from where we are right now to that line, we're about 2.8%. So resistance 2.8% away for the Nasdaq. For the S&P 500, maybe about 2.5, 2.83% as well. Okay, so Nasdaq did great today. The S&P 500 and the Dow, they actually returned into positive territory for the month of May. That's very important. I'm going to go to the monthly chart. And it's going to be kind of difficult to see because it's a really small candle. Let me remove. There we go. The candle all the way to the right. It's really thin. It's got some big wicks on the bottom and a little wick on the top. Almost looks like a spiked hammer that you would see, or maybe a sword standing up, something like that. That's for the month of May. So for the month of May, the S&P 500 is up 0.64%. And we have one more trading day for the month of May. Now, if we look at the Dow Jones on the monthly, you can see, again, another small candle. And it's up 0.7% for the month of May. Now, the Nasdaq for the month, let me show you real quick. The Nasdaq's down for the month, 1.35%. But for the month, remember, there's this big wick at the bottom. For the month, if we were at the lows from where we are right now down to the low for the month, that's another 9.2%. So for the month of May, the Nasdaq has pulled itself back up nearly 9.5%. So it's not too shabby, but it is still negative for the month. And then if we look, but that's nothing compared to last month, right? Okay, and then the Russell 2000, it is green. Small caps have not been getting beaten up as bad this month as they did the past month. And what I like to see here is the last month candle, right? We are above the bottom of that candle. The bottom of that, where it closed, was 1864. And where we have closed so far is at 1887. So just slightly, right? 64 to 87. Not a whole lot, but it is up a little bit. And again, for the month, it's up 1.2%. So I just wanted to point those monthly figures out since we're getting real close to the end of the month. Only one more trading day left to go. Now, today's economic data was, I guess I should say, headlined by the personal income outlays report for April. Now, the report showed that a smaller than expected increase in income and a larger than expected increase in spending. Now, we know, we've been saying it over and over again on this channel, that the consumer was strong in the first half of the year. Excuse me, I just bumped the my chair here. The consumer was strong in the first part of this year. The consumer is weakening right now. At least that's the thesis. And the consumer will be weakened by the end of this year. That's the thesis right now. It can evolve and change, but that's where we stand. Now, the year-over-year deceleration in the PCE price index was viewed as a silver lining that could potentially signal an inflationary peak. Peak inflation. Interesting. This is something that the Fed will look at real close when it meets in a couple of weeks and decide what's the game plan. Are we sticking with the 50 basis point rate hikes for June and July? What are we going to do in September? Maybe we'll get a clarification on that next in the next couple of weeks, the 14th and 15th. So we would get the confirmation on the 15th of June. Okay, so potentially peak inflation has occurred. And again, this is what the Fed uses to determine the core PCE price index. That's what they really look at in terms of inflation, whether it's still rising or falling. Now, we'll talk a little bit more about that in the future. Now, I shared earlier, and let me just get back here to the S&P. So we got a clear chart to look at, and we know what we're looking at. Okay. Now, I shared the details of this report with our investors on Patreon this morning, so they could use this information to make a better informed decision about their investments. If this is something that you would like to receive, valuable information just like this, at the right time, I may add, to help you along your investor journey, then come and join us. We would love to see you there. Click the first link in the description to come join investors just like you and me. Now, all of the sectors today were in positive territory, and many spent the day 2%, or I should say ended the day up at least 2%. That's a pretty big deal. Now, top-weighted technology was up 3.4%. That spent the day near the top of the leaderboard, along with the consumer discretionary sector up 3.5%. Now, the relative strength in these groups was very notable, since technology and retail stocks have been among the worst performers during the market's recent slide to levels not seen since early 2021. I was about to say 2021. I guess that works, right? 2021, last year. with earnings, there was a company that stood out, Autodesk. I know a lot of people don't talk about Autodesk, but it's an interesting company, and they really performed well. Ticker symbol is ADSK. ADSK, Autodesk. Let that load. Up 10.3% on the day. Now, they finished at the top of the tech sector after beating Q1 expectations and issuing mixed guidance for fiscal year 23. While top-weighted components like Apple, I'll pull Apple up, AAPL, Apple, 4% today. NVIDIA, NVDA, NVIDIA, I think they're up 5.4%, another 0.5% in the after hours. That's great. NVIDIA has broken its resistance. Nice gap up to break that resistance too. But it is at another price point resistance, right? You can see the resistance that it broke, this falling line. It had broke it before. Yes, that is true. About the 17th of March. Yeah, 16th of March, it broke through it. 17th of March, it back tested and took off. So that's good to see NVIDIA there. Didn't quite get down to my buy box here, but I don't know. My thesis does say we haven't seen the bottom in the market yet. Even though we're having this impressive rally, my thesis has not changed yet. And I believe it was a couple of live streams ago, I talked about how even in down markets, you can still get rallies. We've talked about that. That is clear. That's part of my thesis for the market right now. Microsoft was another one. MSFT. Let that load. Microsoft was up 2.7%. Nice, strong several days. It broke above its 21-day moving average today. Okay. Tesla, TSLA. These are big dogs we're looking at here now. Tesla, 7.3% today. It got right to its 21-day moving average and stalled out there. But that's all right. It's had 3 nice days. 3 nice days. Yesterday was another 7.4%. Today's 7.3%. Real nice days. Now, why am I bringing up these big cap companies? Because these are the companies that we have to pay attention to. If this rally is going to continue, these are the companies that will be leading the way. Mega cap stocks. I said this last week during the live stream. Mega cap stocks are the ones that we have to watch for signs of a rally, because they will be leading the way. They're the big ones. They pull everyone else along. Now, Apple, NVIDIA, Tesla, Microsoft, they were great. They were major contributors to the rally. Now, NVIDIA's strength also helped the Philadelphia Semiconductor Index gain 4% and finished the day ahead of the tech sector. Though both groups did gain 8.1% for the week in total. Retail stocks in the consumer discretionary sector, which have been beaten up really bad, were also a notable source of strength, even though the quarterly reports from the group of stocks have shown continued concerns about costs eating into margins. One that didn't show that concern that we looked at yesterday, Ulta Beauty. Ticker symbol is ULTR, Ulta Beauty. I'm sorry, ULTA. I clicked that wrong button. ULTA, Ulta, not Alter. Ulta Beauty. Look at that. My gosh. I mean, it looks like a rocket ship taking off there on the screen. 12.4% today it was up. Look at this. Giant gap up. Giant gap up. Wow. all because of earnings. So Ulta Beauty finished ahead of other discretionary stocks after reporting better than expected results from its EPS and revenue, and of course its guidance. While a company like Gap, ticker symbol is GPS, Gap earnings were different. They did not finish with solid earnings for their earnings report. But the strength of this market right now, this right here is a testament to this market strength. Gap was down nearly 15% at today's open. I'm going to go to the 5-minute chart on Gap here. So I want you to see this. Gap was down, and let me circle this for you to make it easier. At the open today, Gap was down here. Okay? I'll turn that to red. That's where Gap was. Down 15% at the very beginning because of their earnings report. But at the end of the day, they were up 4.3%, nearly a 20% difference. That's the strength of this market at this moment in time. Those big mega cap companies rising, bringing in money. Maybe this is why the crypto market is doing so bad right now, because money is flowing from crypto to the stock market. And you got to remember, there's a lot of cash still on the side, just waiting for this market to finally hit its bottom. We'll see what happens. Now, on the bright side of Gap, I guess I could say, management did indicate that performance is expected to improve in the second half of the year. Now, I find that very interesting. Very interesting. Now, the important, or improved, not important, the improved sentiment in the market, it did mask continued strength in the energy sector because everything else was doing so good. Energy was only up 1.7% today as crude oil returned to its May high, which isn't good for gas prices. The energy sector did gain 8.1% for the week, extending its May advance to 16.9% for the month of May. While crude oil climbed 0.6% to $114 a barrel today, it also rose 4.3% for this week. Now, the Treasury market, that's where things were a little bit on the mixed side today, but largely little changed, like it has been. The Treasury complex climbed for the third week in a row. Let's look at the 10-year first. US 10Y. Remember, you can do this at home. There's a link in the description of this video for a free account to TradingView. It's where I do all the trading. All the charting. Crypto is bloody in my opinion. Yes, it is. The death cross occurred when the 50-day moves below the 200-day. What do you think? Tesla. Yes, I actually have a standalone video out that talks about the death cross. I'll bring that up in just a moment. We'll talk about the death cross. Nearly done here with the talking left to treasuries here. Where was I? Treasury. Okay, 10-year. We're at the 10-year. Did I not type in the right one? US 10Y 10-year. Oh, it's the 5-minute, not the daily. I'm like, I know I had a trend line here. Okay, so you can see it's been flat for the past 3 sessions. And it's got a pretty significant trend line here that's going to act as resistance for the 10-year. Now, it only slipped 1 basis point to 2.74% today. But the benchmark yield did surrender 5 basis points this week. Not a lot. Now, it is staying above its 50-day moving average, which is at 2.73% at this moment in time. Looks like it's just moving sideways along that 50-day, and it's going to get to that resistance, and then something's going to have to break, either up or down, but it's going to have to move. Now, let me load the 2-year right quick. US 02Y. And you can see the 2-year, same thing. It's flat. It's barely even budged. Barely even budged. Today, it opened at 2.48%, and it closed at 2.48%. It just didn't move. Didn't move. All right, moving on to today's economic data. We got the personal income, and it increased 0.4% month over month. Expectation was 0.5%. And that followed a unrevised, meaning it didn't go up or down, 0.5% increase in March. Personal spending, that was up 0.9% month over month. We were expecting 0.6%, following an upwardly revised 1.4% increase in March. Now, the PCE price index was up 0.2% month over month. Expectation was 0.3%, so not quite as bad. The core PCE index, which excludes food and energy, was up 0.3% month over month, right as expected. Now, the main thing in this report is that there was a moderation in the year-over-year rates for the price indexes, which will support the peak inflation narrative. The PCE price index was up 6.3% year over year versus the 6.6% in March. So that means it has come down a little, just a little. And the core PCE price index, which again excludes food and energy, and it's the one that the Fed watches most closely, was up 4.9% year over year versus the 5.2% in March. So it has come down too. How is the Fed going to look at this? They're going to see their main inflation number has come down. Okay? They may see that the economy is contracting. Okay? They may see the consumer is weakening. Okay? Are they still going to continue to raise rates? It depends on how much weight they're going to put on this 4.9% year over year increase versus the 5.2% last month. That's what they're really going to focus on, because the Fed right now only has 2 mandates. One of them is not to keep us out of a recession. One of them is to employ or get us to max employment. The second and that mandate is fine right now. And the second mandate is to bring down inflation. That's the only 2 things that the Fed cares about right now. The only 2. So, are they going to look at this with inflation coming down ever so slightly and say, hey, we're doing the right thing here, it's working? Or are they going to say, we need to put the hammer down and crush it? And continue with the 50 basis point rate increases? That's the question. So according to this data, inflation has come down. Now, the final reading for the University of Michigan's Index on Consumer Sentiment, it fell to 48.4 from the preliminary reading of 59.1. So again, just ever so slightly, it got worse. Now, the final reading for April was 65.2. But in May of 2021, 1 year ago, the index of consumer sentiment stood at 82.9. So inflation concerns have negatively impacted views on buying conditions for houses, for durables, and the future outlook for the economy. Your regular consumer out there has lost faith, does not believe inflation will be under control anytime soon, and the economy is only getting worse. All right, remember, the bond and equity markets will be closed on Monday for Memorial Day, so you can't make any trades, or I don't know, you can't make or lose any money. You're gonna break even on Monday, which is that's not too bad, right? You can still trade in the crypto market on Monday if you choose to. But remember, the crypto market is falling pretty heavy right now. It looks like there's something that's a little off. Now, if you could, if you learned something new in this video, if something in this video was helpful to you, then do me a favor and click that like button. Share this video wherever you can. If it's your first time watching, click subscribe so you never miss a video. All of this really helps a small channel like this. And if you are definitely liking this content, then consider joining investors just like you and me over on Patreon, where there's tons of information to help you along your investor journey. All right, let's look at the death cross. I'm going to go to the S&P 500 just to show an example of the death cross. The death cross is a lagging indicator, meaning once the death cross occurs, the equity, the crypto, whatever it is on the chart, has already been going down. So it's a lagging indicator. If we look right here, there is this red circle right here. Okay? Right there, middle of the screen. That is a death cross. And it's when a short-term moving average crosses down and below a longer-term moving average. Like it could be the 50-day moving average and the 200-day moving average as your short-term and long-term moving averages. The 50-day moving average would be going down. The 200-day moving average would be going up. And they would cross to make a death cross. Now, if we look here on the chart, we would go all the way back to here on the chart, up here at the top, which is the beginning of the year. And we had already been falling this entire time before we got to the death cross down here. Okay. So that lets you know that it's a lagging indicator. It's already been transpiring. Now, if you would use the death cross and say, oh, a death cross occurred, I need to exit the market. That means you would have exited the market literally the day right before our snapback rally right here. Okay. You would have exited the market one day right before the snapback rally began. So I don't put a ton of faith in death crosses or golden crosses. A golden cross is the complete opposite of a death cross. It's when the 50-day moving average is going up and the 200-day moving average is going down. It's a lagging indicator, meaning the market has already been moving up before that golden cross occurs. Now, it's fun. It can be spooky to new investors to hear that there's such a thing as a death cross. But again, I don't put a lot of faith in just a death cross today. So Tesla, is that where you saw the death cross? SPY options went insane today. Yeah, depending on whether put or call there. I mean, wow. Wow. Oh man. Let's see here. So what do we got? Okay, yep, there's the death cross. Okay. Let me put that circle around it. So we've got a right here. Oh, I need. Okay, let's see. There we go. All right, let's move it down a little bit. So yesterday on Tesla's chart, a death cross did occur. Now, just barely. Let me see here. I wonder if I do that. Is it any clearer? All right, so that death cross just barely occurred yesterday. So you can see, if I go back here, Tesla has already been falling with the death cross occurring. So we go back to April the 5th here, and Tesla has been falling, and actually stops right here. And the following day is green. The following day is green. And then we get the death cross. So whether or not Tesla continues going up, or if it reaches some sort of resistance around 780, 785, and it comes back down, it's irrelevant with this death cross, excuse me. Because once you identify the death cross, it's like, well, you know what? I've already lost, if that's what I'm going to rely on. And then let me see if I can find here, take that line off, oh, it's real. I got too much stuff on this chart. Too much stuff on this chart. Let's see. Oh, that's not what I wanted to do. I'm just making the chart worse. I was looking for there's a golden cross right here. It's just really hard to see. But again, it occurred after the stock had already been rising. So, I mean, it really doesn't. That's why I don't put a lot of faith in death crosses or golden crosses, because it's already happened on the chart. Okay, does that make sense, Richard? I want to make sure that you got that. They're fun, they're cool, but I don't think there's a lot of meaning to them. At least I don't put a lot of faith in them. It's almost like how we judge if we're in a recession or not, right? We have to look backwards to know if we're in an actual recession, because we need 2 quarters in a row of GDP contraction. And we already got our first one, Q1, 1.5% contraction. And we're in the second quarter right now. So we won't know for a couple months or another month or two before we have a estimate on what the second quarter GDP was. So it's a lagging indicator that we use. So I would prefer, it's not always possible, to use forward-looking tools instead of tools that are looking backwards. But doing your history and knowing what has happened before can help you prepare for what's to come. See, you may say it's a bearish sign, but the market has already been falling. So yes, technically it's a bearish sign. But technically, if we want to measure this out in time, I'm going to start here and I'm going to go to the death cross, which occurred yesterday. Tesla has already been falling for 52 days before the death cross occurs. That's what I'm trying to relay here. It's a lagging indicator. It's like looking in your rear view mirror to drive forward. So it is technically a bearish signal, just like being in a recession is a bearish signal. But we don't technically know if we're in a recession unless we look in our rear view mirror. And that makes it really hard to drive a vehicle going forward. And then it's possible that if we look at Tesla's rally here before it started falling, this rally right here, which went on, I guess I should go all the way to the top to make it fair. This lasted 21 days, and it was a 53% rally right before the decline. So we don't know if we're at the beginning of a 53% rally in Tesla or not. We could continue moving forward and rising. So that's what I'm going to do. I'm going to put the link to the video I did on death crosses in the chat, so you can watch it if you have some time. Because I go back through the history of the S&P 500 and find different death crosses. So you have plenty of historical examples to look at how death crosses have worked out. All right, just getting that link for the death cross video. There it is. Okay, all right, there it is in the chat. Watch that video if you have some time. It explains death crosses and how to use them or what to do with them. It definitely goes through greater examples. I'm not sure if I still have the other death crosses on here or not. Looks like I might have deleted them that I had on the chart. I mean, here's a great example in 2008 for the death cross when it occurred. The market had already been coming down. Let me go to the daily view here. Can I do that? No. All right. So here we have the death cross. This is the 2020 death cross. And the market had already bottomed and the market was already recovering by the time the death cross occurred. So would you consider this to be bullish or bearish? In this example right here, this death cross was bullish because this was the start of the 2000 or 2020 and 2021 rally. That was one heck of a rally, one of the best in history. So this death cross was definitely a bullish signal, not a bearish one. Let's see what other do we have. And here's one. Excuse me. Now this death cross right here occurred about halfway down before reaching market bottom. So this one, sure, I give it to you that it is a bearish signal, but the market had already fallen. Let's see, a good chunk. One time it bounced, fell a second time, rose, and then on its third and final time, that's when it fell right after the death cross, and then bounced back up. Let's see, do I have any others still on here? Here's an example, a real short example. We actually have a golden cross and a death cross here. So right here is a golden cross. It's where the 50-day moving average is moving up higher. And then shortly after that, then we get our death cross right here. And by the time the death cross occurred, I would say we were already 2/3 or 3/4 of the way through the fall before reaching bottom. So we were almost at the bottom, but not quite. So that was the golden cross here, which you would say would be a bullish, was actually a bearish signal at this point because it was tipping off that we were about ready to fall. Here we've got a death cross, and this death cross right here, let's see, it occurred. When did it occur? It occurred right here on August 28th, which if I go down, this death cross right here occurred after the rebound had started. So right about here. So we had already had a rebound. Now there was a double bottom on this one. So could you say that was a bearish signal? We were already rebounding when the death cross occurred, but we had a double bottom and then we rallied out of it. So, you know, it's interesting for sure. Let's see, what other ones do we have? Here's an example of a golden cross. right here, which would be considered a bullish. And if we look right here is where it occurred, but the market hit bottom back here, and it had already been rising by the time we hit that point. And then it continues going. And I would say this golden cross, it occurred right before this correction here, 2/3 after 2/3 of the time after the market had already been rallying. So I hope that clarifies the death cross, golden cross for you. They're not super reliable because they're a lagging indicator. They're looking backwards. All right, well, we'll go ahead and wrap up this live stream here today. Man, I was not expecting today to be as green as it was. That's just to prove my point there that I'm not always right. But I learned. I definitely learned from each day in the market. So I hope you guys have a wonderful extended weekend. Hopefully you get to enjoy that extended weekend. You don't have to work, but I will be working. I've got a write-up coming for Patreon members tomorrow, and I got my NVIDIA video nearly done, and I've got the Palo Alto Networks video ready to be uploaded. So I've got those two coming out, and we will rocket this on Tuesday. There has been some sort of pullback. There has to be some sort of pullback on Tuesday. It's possible. See, this market, it wants to rally desperately. So it's going to use any good news right now, even a sliver of good news. At least this is the opinion that I'm forming from the past few days. From last Friday's big bounce at the end of trading on Friday, how the market acted the past 2 days with a lot of strength, the market just really wants to rally. And unfortunately, I think the market's going to rally. I think it's gonna. It could continue, but then it's going to fall. And then people are going to be left holding the bag at some sort of a high, whether, it gets all the way up to the 50-day moving average, which would be a significant hurdle to overcome. Whether it gets up to 4,300, that would be a significant area to overcome. But those are the two areas, and on the chart, that's right here. This is where the 50-day is right now, and then where 4,300 is for the S&P 500. So it's getting close. And if I use the SPY, see, the SPY just broke through this resistance right here. That's impressive. So again, just like the S&P 500, the SPY, it really doesn't have resistance until it gets to this 50-day moving average, and then this price point of $430 a share. And the 50-day moving average is at 426. Yes, 426 right now. And then 430. Those are the two next areas of resistance for the SPY. Now, there's a slight one. If I put this line in right here on the SPY. Oh, come on. I clicked on the wrong one. Okay. There is a little bit of friction right about 415-ish. Now that I put that there, right here, it acted as support. It also acted as support right here. And then, just a couple days later, it acted as resistance. So there's a little bit of reaction time happening there at 4:15. And again, at 4:15, there was a little bit of support right here, a whole bunch of resistance right here, causing a double bottom before finally rallying. So there's quite a few reaction points right there along the 4:15 mark. But if it gets past 4:15, 4:30 is the next area for resistance. So just a couple of thoughts there on the SPY. All right. So again, if it can break through those, and I've been saying this like all this week, if it can break through this resistance, it'll keep going. If it can break this resistance, it'll keep going. And that's just what the market has been doing like this entire week. For the SPY, it was this. We had this trend line resistance right here. It broke that yesterday. We had a price point resistance at 105 that held up as resistance back here at the very beginning of May. The SPY was rejected at 105, but it broke through it, gapped up above it, and now it's up against new resistance at 115. So everything is happening how it should. It's going to these resistance points, and then it's either breaking through it or being rejected. And those are the areas to pay attention to. When it's in between those areas, then it's going to keep moving in the direction that it's moving in. Now back to the SPX for the S&P 500. Right now, it doesn't really have any resistance, but just like on the SPY, those same areas that I pointed out that were at 415 are kind of at the 4170 area for the S&P 500 on the SPX, and it got up to 4158. So it closed at the high for the day today. So it hasn't quite tested that. Actually, I take that back. It opened at 4077. So not, again, my mistake. I thought that was 41. 4077. That's a whole 100 points off. So it didn't quite make it up there. So maybe it hits that and that triggers a bit of a pullback on Tuesday. That is a possibility. That is definitely a possibility. Because old support always becomes new resistance. It's just how it works. So everybody's going to be watching that 415 area like a hawk. And if it can break through 415 on the SPY and then continue moving, then that'll be good news. That'll be able to push its way to 430. And just like here on the SPX, if it can break above 4170 on Tuesday, then, it's running all the way up to 4270 or 4300 or 430 on the SPY. So, I think I just finally correlated the SPY and the SPX. You just take a 0 away. I did not know that. See, I am learning about the SPY. I just realized that. You take a 0 away from... It's kind of close. It's not exact science. It's kind of close. You take the ones place away, and that's about where the where the SPY is at. 4159, that would be 415 on the SPY. 4300 would be 430 on the SPY. I'm glad I just made that connection. That makes talking about the SPY a whole lot easier, knowing that. Wow. See, you guys help me learn, and I love it. So thank you for that. I appreciate it. All right. Well, we'll wrap up this live stream. It's a Friday. Go enjoy your weekend. Have fun. Don't let the market stretch you at all over the next 3 days. Be careful if you're trading in the crypto market. It looks to be a bit fragile right now, but there can be little quick 1-2% opportunities that pop up. Watch your charts if you're doing that, and yeah, have a great weekend. And I'll have some videos coming out this weekend, so you can watch them if you have some time. And I've got almost like a paper that I'm writing to talk about this market in a more detailed way for Patreon members. So if you want to get access to that paper, then click the first link in the description. Join us over there. Tons of information to help you along your investor journey. So please take advantage of that. All right, ladies and gentlemen, thank you for joining me so very much. I greatly appreciate your questions, your time, and I will see you in the next video, and then live Tuesday after the market has closed. Be healthy and do exercise for next week. Absolutely. Okay, I love it. I love you guys. Have a wonderful weekend, and I will see you in the next video. Take care.